What is going on, guys? I want to share with you some of the setups yesterday, aligning with the DTG system for going through news. Right now, I always recommend not trading news because, as we can see, things can get pretty choppy. But if you followed the system and you waited for the confluence aligning with the system with an entry, then there was possible for a couple of setups right here. The first one being during the mid window, right? And right here, what happens now? Again, don't worry if you're not understanding of the concepts I'm about to explain. That is fine, right? It's understandable. You will learn them once you come and join the academy, and you will be able to implement these concepts yourself. And this is liquidity concepts, right? I'm talking about liquidity here, okay? Because during the mid windows, what I like to call the mid window right here, uh, gold comes down and it grabs bullish liquidity from these two yellow levels. Now, all the yellow levels on the chart are liquidity levels. This is a bearish liquidity level. And as you can see, once price tapped into that bearish liquidity level, we had a nice sell off there, a couple hundred pips. Then we pushed into these bullish liquidity levels. And from here, we had that move back to the upside, a couple hundred pips. From there, we tapped into this new liquidity level right here, which we then sold off a couple hundred pips, back down into the bullish liquidity levels where we pushed up, back into the bearish liquidity, and then sold off from there a few 300 or so pips. Then we came all the way down into this bullish liquidity level and we pushed up from here so far during market open today. But right here, during the first window yesterday, there was also a daily retracement level in here. Now, what I'm going to do is I'm going to show you exactly how we draw those daily retracement levels, and I'm going to mark it up from the previous daily low to the previous daily high. And right here, you can see gold is pushing into our bullish retracement level from the daily perspective. Okay, I'm just going to lock that in. If I turn that back off, you can see right here, this is where gold is bouncing. We bounced here and then we come down and we bounce here. We create a low, we create a high low. There was also bullish liquidity in here as well. This was SLS. Okay, this was SLS right here. This is bullish liquidity. Okay. We came back, retraced back down into here. We grabbed bullish liquidity again from this level, boom, and we started to push up during the mid window. Now, this is where the DTG indicator comes into play. Okay, because I'm going to show you right here a beautiful 15-minute buy signal, which also, as we can see, right, retraced into the daily retracement level, bouncing. So we found support. We grab bullish liquidity. Okay, so we grab bullish liquidity here while we're tapping into daily retracement. We start pushing up. We break above a key AY level. Now, these levels are provided by the DTG indicator plotted on your charts automatically, which update for each session and each day. We then break above it. We retest it. So we got the break here in this candle, the retest, and we also get a 15-minute buy signal with the entry, stop loss, take profit one, take profit two over here in the right-hand side of the chart. And from there, once you enter that trade, which would be right here, price pushes up at your stop loss. Price pushes up there, a nice 1 to 2 risk reward ratio, about 98 to 100 pips, right? And if we watch that play out, price comes back down to entry. We see a little bit of drawdown, but then starts flying to the upside right there. Okay, we get another buy signal, but at this point, we're at bearish liquidity. You're not going to be entering a buy signal pushing into bearish liquidity, right? It doesn't make sense. So we grab that bearish liquidity from those highs. You can see the reaction from the absolute just precision, right? And then what happens? We come down. News obviously drops, right? And we start moving into the second window, right? So we get nice move down here. Price pushing back up. Starts to consolidate a little bit now, but we're grabbing the bearish liquidity. Oh, a little bit too far. We're grabbing the bearish liquidity from the chart right here. So grab bearish liquidity. Oh, did not mean to put that. Grab the bearish liquidity here and again here. And then again, we're getting closures below key levels, right? And what I want to show you, right, very quickly is if I turn this on and I turn it to the 12-hour time frame. Now, the 12-hour time frame is a very key time frame for us. If you want to learn about all these time frames, all these liquidity concepts, retracement concepts, key zones, come and join us in the academy. You will get a full system that you can plug in and start applying to your chart straight away, where you're going to be able to find these setups for yourself with clarity and clear direction, bias, confluence, entry models every single day, right? Not only do we give you the analysis techniques from the liquidity, from the retracement, from the inside bar patterns, um, everything like this wick formation, candle formation, we also give you then confluence in terms of, you know, building confluence with your trade in a direction. You can see right here we have clear direction, weekly, daily, 4-hour. You know, we also give you the entry models. We give you 3 different entry models, which you can see right here. One of them is the buy signals, or the signals in general, buy and sell signals. Another one is AY break and tap, and another one is an IBO, right? So you get the whole system. You also get trade management techniques, journaling techniques. You get everything you need to implement a full scale, bulletproof, battle tested system for you to apply instantly on your charts and plug in and start using instantly to catch these setups, right? It's very simple stuff. So what happens here, we grab bearish liquidity. We also then close bearish on the previous 12-hour candle, right? You can see this previous 12-hour candle closed bearish. It's also an inside bar 12-hour bearish candle. And we know that once we get inside bar candles, there is potential for high volume moves. And once price drops here, once news drops, we get the FOMC, we get interest rates, Fed press conference, we start to get gold starts to move, right? And if I turn on that again, I'm actually going to draw out, let me just turn off. I'm actually going to draw out the 12-hour retracement zone, which is this zone right here. And what do you see? Well, you see gold grabbing bearish liquidity twice from this liquidity level right here, this yellow level. Then we're also retracing into the top end of this 12-hour retracement zone. We're getting rejection, rejection, rejection. Then, right, so now we have direction, we have confluence. Then we get closures below the AOI level, right? So this is another point of confluence, a closure below a key level. And then what happens? Well, we get a 15-minute sell signal. Where are you? Here we go. We get a 15-minute sell signal coming down here with our entry, stop loss, take profit 1, and take profit 2. Okay. So those were the 2 setups yesterday. Let's play that out. Boom. 2 candles right there. 140 pips and 98 pips. Right. So a lot of moves yesterday. If you're following the system, if you're building your confluence with liquidity, with retracements, with wick formation, candle formation, you know, key levels, and then using one of the entry models, you're able to build a case here for buys and then also sells. And you can see price coming down here, tapping the 1 to 2. Or you can see right here, 1 to 2 being tapped, reversal, right? Key levels, key points. This is why we only have a 1 to 2 risk reward ratio here. It's all very precise. It's all built with exact reason and precision for you to get the best results, right? So 1 to 2 met, key level tapped, price reversed. 1 to 2 met, key level tapped. We're actually going to tap down into the next level, I believe. And then, boom, price reverses, right? From that point, price reverses. So those were the setups yesterday following the DTG system and the DTG entry models. Decent day, you know, even though we had news and price did consolidate, you can see that we're still able to execute on trades, even though price is consolidating, as long as you're following the system and building your confluence. And just look at all these liquidity levels, right? This is how powerful my liquidity levels are. If we're talking about this bearish liquidity level, we've got a 200 pip move from there, from that bearish liquidity. From this bullish liquidity, we have 270. That's 470. From this bullish liquidity level, we have 180. So that's like 650. Then from this bearish liquidity level, we have a move down 200, so that's 850. Then from this bullish liquidity, we have a move up. That's 1050. And then from this move down again, 1350. And then from this bullish liquidity level, price so far has moved up 130. So that's like, I don't know, like 1,500, 1,600 or so pip moves from these liquidity levels themselves, right? All throughout the day. So if you want to learn about these liquidity levels, like I said, come and join us. Complete the course. The 64, 65, 66 lesson course from beginner to advanced, showing you all these concepts, showing you how to plug in the system and use it yourself on any pair, really. But obviously, we use this the most on gold. And start implementing these concepts and catching these setups for yourself, man. That is the DTG system, the #1 system in this industry, built by me for you guys to, built by me for traders, for simplicity, for clarity, for clear structure, routine, direction, entry. Anything you need is within this system. Come and have a look. If you have any questions, please let me know, and I'll see you in the next video.